When it comes to depreciation, investors instantly think about their property and what's inside. But did you know that the outside of your property can be depreciable too? Hey everyone, Kim Quach from Tax, here for another video designed to help you become a better property investor. Our focus here at Tax has always been to help investors maximize their tax depreciation. But most of the questions we get from investors have made me realize that there's still a misconception about what exactly you can claim depreciation on, especially when it comes to demolition, landscaping, and tree removal. So there are definitely ways that you can claim these potential tax deductions, but there are limitations to what you can claim and some rules you need to be aware of. So in today's video, I want to share those rules and limitations so that you know exactly when you can and cannot claim depreciation on them. For example, tree removal might not be depreciable in certain circumstances, and landscaping is only depreciable when newly built structural components are involved. So stick around to find out what depreciation claims you might be missing out on and what should be left off your tax return. Before getting started, we want to be clear that this video is for informational purposes. In no way should you interpret this as tax advice. We always recommend working with a qualified accountant or tax agent to give you the best advice for your situation. Let's start with depreciation and landscaping. So, it's important to know that the act of landscaping is actually not deductible. So, if you're laying grass or planting new trees, you're not going to be able to include this in your tax depreciation schedule as additional expenses. I will say, though, you should keep records of these expenses because you can add them to the property's cost base, which could potentially reduce your capital gains tax in its eventual sale. And if you have completed serious renovations on your rental property but were unable to keep track of costs, you can actually get a capital gains reduction report to identify the increase in capital costs so that you can reduce your capital gains tax. But if you've purchased structural components as part of the landscaping process, then capital works deductions apply and you can claim depreciation on those assets. Structural components range from retaining walls and fences to paving and fixed raised planter boxes. So, if you're thinking about carrying out some landscaping changes and you're going to be adding physical capital works assets, then it's worth claiming depreciation and saving some dollars. Any extensive landscaping might also call for carrying out some kind of demolition and removal of debris, which leads to my next point. Is demolition depreciable? Well, the process of demolition isn't depreciable. You can't claim deductions for knocking down an old retaining wall or getting rid of an old deck. But you can claim the scrap value of those assets if you're going to throw it away. Scrap value is the loss in value of an asset in your investment property that you're demolishing or throwing away when you're doing a renovation or replacing it with something new. For example, if you're throwing something out that originally cost you $2,000 and you've claimed $700 in depreciation, you can claim $1,300 as an instant deduction just for throwing it out. If you want to learn more about scrap value and how it can boost your cash flow, make sure to check out our YouTube video where we break down how much you can actually save in taxes by getting a scrapping report done. And on the note of demolition and scrap value, you may be wondering, what happens if you remove old trees while undertaking your new landscaping works? So, tree removals work a little differently from throwing away old capital assets. Tree removal is only claimable if the trees have become diseased or infected during the time of ownership, or if the tree is causing damage, like if its roots are interfering with pipes and the damage wasn't there when you first bought the property. On the other hand, You can't claim depreciation if a tree is removed as part of your landscaping or demolition process. This is because according to Australian tax law, any costs to clear the land for construction is not considered construction expenditure. Construction expenditure is a construction cost of capital works, and it's what we use to work out the depreciation of the capital works. We recently put together a report for one of our clients who carried out extensive landscaping work. This included some earthworks, removal of some trees, returfing, and construction of a new brick retaining wall. They also installed a new outdoor entertaining area, which consisted of a pergola, outdoor furniture, a freestanding barbecue set, lighting, and fans. Now, our client couldn't claim depreciation on the returfing, earthworks, or the removal of the trees, but they could claim capital works deductions on the retaining wall. They could also claim depreciation on the new outdoor furniture. Oh, and don't forget the scrap value of the old outdoor table and benches. In the end, they could claim $500 of depreciation on capital works, which includes the retaining wall and pergola, $2,700 in plant and equipment, including the outdoor furniture, freestanding barbecue, lighting, and fans, and $315 on the scrap value of the old outdoor table and benches. This means that in their first year, after the renovations, they could claim over $3,515 in depreciation. So the point I'm trying to illustrate here is that you shouldn't overlook the benefits of claiming on depreciable items outside of your actual investment property, because you could save more tax money for your property than you ever have before. But remember, a depreciation report and a scrapping report is an essential tool in reaching those savings. If you're looking to order one or both of these reports, you'll need to contact a quantity surveyor. Anyway guys, there you have it. Make sure to check out our YouTube channel to subscribe for more property investment tips. And make sure you click on the bell icon so that you get notified of the next video. I'm Kim Quach from GeoTax. See you next time.